Hello everyone and welcome back to Sudden Wealth. Please consider dropping that like and subscribe if you do appreciate my content. It greatly helps the channel. Thank you very much. So tonight I would like to discuss just a little bit about the central banks and what they're planning to do, particularly the Fed, because the Fed kind of guides the other ones on what to do. So why did the Fed raise rates so much so quickly? And to be honest, they've been raising rates and trying to see if anything breaks or not. And as long as it doesn't break, probably there's still at least a bit more room for the rates to run. Now, are they causing an intentional crash so they can deploy CBDCs? Look, that conspiracy theory does not even pass the smell test. Why? Number one, 99% of dollars are already digital. So guess what? This is basically, getting that last 1%. So not a big deal. Number two, it's very easy to sell it on a different way. Money is dirty. Cash is used by criminals with central bank digital currency. We will prevent terrorism forever, blah, blah, blah. So there are plenty of reasons on why to do it. What I think the Fed is trying to do is to free themselves of this game of QE and supporting the market. What do I mean by that? Most people are pricing in rate cuts. As I mentioned before, the most bullish thing that can happen is if they stop the rates here and nothing breaks. That's the best scenario. Not a rate cut, because a rate cut comes as an answer to a huge problem. And inflation expectations will rise through the roof. And actually, by the way, every time the Fed cuts rates, the immediate responses is that actually stocks and everything goes down. But I think what they're trying to do is to normalize interest rates between the 5 and 6% range, as they used to be in the past. And I think they're trying to get themselves out of this game of market manipulation, supporting the stimulating markets, keeping stocks, commodities, whatever afloat. So they're trying to get themselves out of it. Will they succeed? So far, so good. I see a huge issue with what I understand what the Fed is doing. I think it makes sense from a purely philosophical standpoint. Stop micromanaging, rates and the economy. Well, seems like a good thing. And money should be expensive because that's one of the key definitions for money is that it needs to be scarce. How the hell can it be scarce if you print trillions of it every year? There's no scarcity, right? But what is my main issue with this attempt? I do think it can last for a couple of years, maybe 3 years or so. What is the main issue with this? Very simple. Are governments, or at least the US, is the US running a budget surplus to reduce the debt? No. It's actually running about $1 trillion deficit. Well, that means that every year the budget deficit goes into the debt and to the debt and to the debt. So it goes from 32, 33, 34, 35 trillion dollars, etc. But how can you pay 5-6% rates on $34 trillion? In theory, it's actually worse because you have to, that's just the official national debt. If you sum the state debt, municipal debt, it's actually closer to the 80 trillion. But let's say 34 trillion, okay? Just make it the official debt. Well, 34 trillion times 6%, well, that's a lot of money. And that is part that the tax revenue, the taxes that the government obtains from corporates and individuals, a huge percentage now is going to pay interest, not the principal, just service the interest of the debt. Well, is the US producing more than it exports? No. It has huge trade deficits besides the budget deficit. So what are they doing with that trade deficit? Well, they're borrowing that money too. So it's going to get to a point where the interest payments on the national debt are impossible, or at least they will eat up almost the entire tax revenue. And the US citizens, this is not like 1930, where only 2% of the population actually paid taxes, and there was basically a lot of room to. I mean, people are already taxed quite aggressively. In some cases, more aggressively than actually some European countries, which were considered socialist, are now being taxed the same levels as the US. I'll give you an example. The Netherlands, Luxembourg, Switzerland have no capital gains tax. The US has. You barely pay any taxes up to 20,000 euros. In the US, you pay. So many of them have no wealth tax. Many of them have no inheritance tax. So what I'm trying to say is there's very little room to grow, raising taxes. But there is room to decrease government. However, if any person proposes government cuts, you can bet they will not get elected. So that is my problem with this goal of the Fed. How can you service the debt, where the interest payments are getting so high, and particularly as your debt is going up and up and up and up and up, so your interest payments will compound, get worse and worse and worse until it's half of your tax revenue. How do you solve that? That's a very good question. I do not have the answer, but I do believe that that's where they're going to figure out that what they're trying to do is impossible. And then they will pivot and cut. But not 2023, probably not 2024. You need something to really break. And no, it's not commercial real estate. Everybody thinks it is. And because everybody thinks it is, it cannot be. That's how bubbles work. That's how bubbles pop, is where everyone is looking over here and not looking over there. And that goes down. Think about the banks, right? Everyone was worried about inflation, about defaults of companies and things like that. And then the issue was too many people were withdrawing cash from the bank. Oh, there you go. Nobody actually thought, because according to those stress tests that they do, they would pass everything, and then they came out of nowhere. So that's my take on the Fed's goal and why I think it's going to fail. We'll see. But what I'm saying is, like most people are pricing in rate cuts in late 2023, things like that. I really don't think so. I would say it maybe late 2024, but we'll see. Maybe something breaks and they will need to print. Oh, by the way, what I'm saying is official rate cuts. So for example, if banks start to struggle with liquidity, they will call it something else. They will print money for it. But they will call it something else. They will call it a bank emergency liquidity program. They will call it Operation America, something like stupid like this. But in any case, guys, thank you for watching, and I'll see you in the next one.